My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people make friends. I'm just trying to make you a little money. My job is not just to entertain, but to educate, amuse, and teach. Call me 1-800-743-CNBC or tweet me, Jim Cramer. Memo to anyone on Wall Street who thought the Federal Reserve would cut interest rates next month. We told you you were wrong. We made fun of you endlessly. We criticized your acumen. We questioned your salaries. And well, we were right, and you got egg all over your collective faces. All right. Today, we learned that the economy created a huge number of jobs in January, more than 350,000, nearly doubling the expected 185,000. At the same time, we did see a little wage inflation get a little hot there. The result, well, certainly wasn't what you'd think. Despite sharply higher interest rates, the Dow actually gained 135 points. S&P jumped 1.07%, and the Nasdaq surged 1.74%.
House of pleasure.
Chalking off the bonds. Now, that's something, isn't it? But the averages this session actually were a little irrelevant, especially NASDAQ, because we caught some legendary moves today in a few specific stocks. Meta Platforms up 20%. Amazon up nearly 8%. Both companies reported stunning numbers that were almost inconceivable, frankly, as they managed to sell many more goods with fewer people. And the goods have high margins, especially advertising. Put simply, today was all about a handful of magnificent stocks, which made you an incredible amount of money, especially Meta. Mark Zuckerberg created more wealth in a single day from a single stock than anyone else in history, as Meta added nearly $197 billion to its market cap today, and I'm throwing in a dividend. Great reminder that owning stocks can be a powerful way to augment your paycheck. Oh, and a reminder to the charlatans who try to scare you into ETFs with that single stock risk nonsense. You should know that your naked greed, your Jeremiahs, have hurt our viewers. Meta Money, amazing Amazon, huge wins. I say thank you. And that's what earnings season does, doesn't it? It produces surprises. So what surprises might lurk next week? I think we should check out the game plan. Monday morning, Caterpillar reports. So this thing's been a horse. I don't know if you've seen it. McDonald's, too. The myriad short sellers have been absolutely crushed and obliterated by Caterpillar, as its orders for infrastructure and data centers have been humongous. This stock is up nearly 100 points since it last reported. McDonald's, this is a set your watch buy its stock, because it almost always goes higher after earnings. I don't think this time will be much different. Some people say, Jim, if it's so easy, why isn't everybody rich? Well, there's periodic vacillation, but I think it'll be a good quarter. At the close, the legendary David Simon will tell us how Simon Property Group's done, and this, the largest small company in the world, should give you not only a terrific report, but an excellent outlook. Simon Property has paid out a huge amount of dividends over the years, and I'll bet it continues the tradition. He knows retail better than anyone I know. Tuesday, the only company that's been able to eclipse the value of Tesla and elbow itself into the upper echelon of market capitalization is none other than Eli Lilly. And it announces its earnings, and it's all about the GLP-1s, the anti-obesity, anti-diabetes drug that potentially has a whole bunch of other uses. The magnitude of sales remains unknown, but I think I know what matters. It's how quickly they can ramp up all the factories to meet the demand, because, wow, is this stuff in short supply. Earlier this week, Trane Technologies reported a monster upside surprise because of strong heating, ventilation, air conditioning sales. I bet Carrier Global could do the same thing. Dave Gitlin's company, CARR, I like the story very much. We learned today that Spotify inked a contract with Joe Rogan worth perhaps as much as $250 million for the popular talk show host. Here's my thinking. I knew Spotify's been doing well, but this contract makes me think that you could be in for a real boffo set of numbers. I like the setup. Spotify. You want a sleeper industrial? The Travel Trust has one. It's called Linde, the industrial gas company. Linde has a perfect mosaic of businesses. It supplies gases to carbonated drink makers, hospitals, oil and gas companies, semiconductor manufacturers, dentists, dollar stores for helium balloons, and vintners. The company does fine when the global economy is struggling, and it does great if the global economy is strong. After the close Ford Motor reports, I'm encouraged about this Travel Trust stock for two reasons. One, my favorite auto analyst, Adam Jonas over at Morgan Stanley, is now calling it his favorite name. And two, Ford's monthly numbers this morning that Phil LeBeau gave us were terrific because it sells an awful lot of hybrids, where the money is right now. I would have thought the stock would have acted better today. Kind of. It's a little daunting the stock acts so badly, but I'm hopeful. Chipotle reports, now get this, I think it's going to be a blowout, plain and simple. But I wish they split the darn stock the way Walmart did. I know you can buy fractional shares, but that's not what people really want. While everybody knows that splits are pure optics, the fact is optics matter in this business, and it's kept people out of one of my absolute favorite stocks and one of my favorite places to eat. One of the most impressive companies I saw when I was out at that JP Morgan Healthcare Conference in San Francisco was Amgen. When it reports, I think it's most likely, and I think it'll be a good quarter, most likely to talk about its own GLP-1 drug, which might be a once-a-month shot, not a once-a-week shot like the current one. If Eli Lilly has good GLP numbers, you know what? I buy Amgen. Wednesday, we get results from Uber, and this company's just become so impressive for the last few quarters. I think they'll continue. It's a juggernaut. CVS reports. Now, I bet that they'll continue to talk about the company's transformation, although I do actually have trepidation about its Aetna managed care division. Could it fall prey to the same medical loss ratio issues that hurt Humana? I'm concerned. Another one I do like, though, Yum Brands. I mean, the franchise market's been very good to KFC and Taco Bell, but not so much to Pizza Hut. Stocks rallied on 2 firing cylinders. What could happen if they get a 3rd firing cylinder? Wow. After the close Wednesday, okay, I'm going to be a little critical for a second on the charitable trust position we've got. Disney reports. Now, we've come to expect just truly mediocre numbers from this once great company. Some of them numbers are really self-inflicted. Something's clearly wrong at Disney. Netflix is running rings around them, and it can't seem to get its costs down. That's why I really want to know why Disney refuses to just put the legendary Nelson Peltz on the board of directors. Instead, they're goading him into a proxy fight. Bad for everybody, I think. Would Peltz make the boardroom uncomfortable? I hope so. This company's performed so poorly, someone should be in that room and saying, hey, listen, guys, we are letting down the shareholders, including us, because we own a lot of stock. That's why Peltz belongs on that board. We get results from McKesson, too, and I like it ahead of the quarter because this drug wholesaler plays a critical role in the pharma system, and it's a serial practicer of UPOD, which means under-promising and over-delivering. I think it delivers again. Nothing's guaranteed, but that one's, of all the ones that are up on the board, I'm putting that first. The newly public ARM Holdings gives you its report card after the close. I think it could have a lot of positive characteristics, somewhat like Broadcom or AMD, 2 companies that are deep into generative artificial intelligence hardware. I expect ARM could have just a dynamite quarter. Now, Chevron reported this. I don't know if you saw it this morning. He really gave an excellent quarter, up before it changed. Sent the stock flying. The company that reports this week that most reminds me of Chevron happens to be Conoco, okay? I really like Conoco. On a Thursday morning, I bet you they put up some very strong numbers. After the close, I spied 2 good ones. There's Pinterest and Take-Two Interactive. I like Pinterest because online advertising is incredibly strong, as we learned from Meta. I like Take-Two because it's about to launch Grand Theft Auto 6 next year, and you're getting a chance to get in before the biggest show in gaming drops on streaming. Next, I am tempted. I got to tell you, you probably don't follow this as closely as I do, but Cloudflare. Take a look at this one. CEO Matthew Prince does a fantastic job running this content delivery network / cybersecurity company. I think its stock will punch through to new highs. We're also going to hear from Max Levchin. He's the CEO of Affirm, the controversial buy now, pay later outfit that's become a short seller widowmaker. That's right. This company is one of the largest lenders that the shorts thought would go bust when the Fed was boosting rates, but it hasn't, and I don't think it will. Friday morning, PepsiCo reports, and the stock has settled into a real rut lately, even as business is pretty good. I think people are worried about, the impact of the GLP-1, the weight loss drugs on its Frito-Lay business. If we do get widespread adoption, it will probably hurt PepsiCo's business because you won't eat as many Lays. But that's certainly nothing to sweat about now. Here's the bottom line. Next week, you got another insane flood of earnings reports, so remember to stop, look, and listen before you pull the trigger. Too much confusion to be as informed as you need to be when you're investing your own money. Gary in New York. Gary.
Booyah, Jim. Thanks for taking the call.
Oh, I'm glad you called, Gary. What's happening?
Well, I've done pretty well since the 90s investing, and I attribute a lot of that to, investing in companies that I have good personal experiences with that are repeatable. But I can't negate the fact that also I've learned a lot from you over the years, even in those cases where I might not agree with you. So I'm very grateful for that. Thank you.
Thank you. Thank you.
So with that, some things I learned from you more recently pertain to this company I'm going to ask you about.
Okay.
One is some of the fiascos associated with ADM. And additionally, you're making a pivot to enterprise businesses as opposed to consumer-oriented ones.
True.
And with that, my concern is with a company I've had great experience with and will continue to use, FMC. Thanks.
Well, okay, FMC is a real tough one for me because, look, I am a Philadelphian, and that makes me want to like Aramark. It makes me want to like FMC. FMC is not delivered. What made me want to reopen the book on FMC, though, is that Corteva reported an amazingly good quarter, which shocked me. But FMC has not done well, and it's just crushing me because I do root for the home team, and right now the home team is not in the playoffs. Angelo in New York. Angelo.
What's up, Booyah, Jim? Great to be on the show tonight. We used to work at 14 Wall Street together many moons ago. I would love to learn a little bit more about MongoDB, been an investor from 2018. Where are they going to go from here?
They're going to go up. I got to tell you, that is one of the best enterprise software companies there is. They pivoted. They're making a lot of money. I really like them. I like that at Dog, too. And I hope I was polite when I saw you in 14 Wall. I always try to put a smile on my face, even though I was completely miserable and unhappy. Anyway, look, we got another flood of earnings reports next week, so my message is to you, please stop, look, and listen before you pull the trigger on putting your money to work. On May 10, I'm sitting down with the CEO of Columbia Sportswear after earnings to find out how a warmer winter could impact its earnings potential. Not in a positive way. Then Prince Harry took Meghan Markle to a Soho house on their first date. It may be good enough for the royal family, but is it good enough for your portfolio? And would they let me in? I'm taking a closer look. Plus, Cardinal Health shares are up nearly 40% year over year. Could its decline after earnings be a buying opportunity? I'm going to talk to the CEO, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.